Hey, welcome everybody to this week's Forex market preview. Hope everybody out there had a great holiday, happy New Year, safe New Year. And last week the market definitely got back to trading. Friday was the slowest day in the market, and we definitely got a little bit of volatility in the market, which is good for us traders. Now, in front of us, we're looking at a chart of the ES, which is basically a futures contract of the S&P 500. Now, you may be asking, why are we looking at a chart of the S&P 500 when we're trading currencies? And if you've been into any of the webinars that I've hosted in the past, I talk about market correlations a lot. Well, there's another thing that I talk about a lot too, is these gaps, right? So basically, we have a big gap in the S&P right here, going back from when the markets open after New Year's. We got a fiscal cliff deal, yada yada yada. Market rallies up. Well, there's a couple things that are important on this chart. One, most gaps like to get filled. Okay, as a rule of thumb, that doesn't mean every single time, but there's a high probability that the gap will get filled. Two, if we look to the left, right, when we're trading, we want to look to the left to see prior areas of support or resistance and other key technical levels that may be around our same current levels. Well, if we drop a horizontal line across the previous high, this line right here is the previous high. You can see we went above it, we closed back below it. That alone is a little bit of bearish. All right, now we have what's called a high wave candle. Now, what would be interesting to see next week, if we can, come back and fill this gap. Once we fill the gap, then we can get an idea of what the market really wants to do. Does the market want to push and go higher, or does it want to take a little bit of a pullback? Now, as this S&P, starts to come back into this gap, there's a couple currencies that we're going to want to be watching. One of them is going to be the pound US dollar. Remember, the S&P and risk on currencies kind of, trade similar. If the market's up, usually the euro's up, the pound's up, the Aussie's up, and so forth. Well, here's a chart of the pound US dollar. Now look at this. This came all the way, spiked the highs from over here, spiked these highs, and those of you that were in class on Thursday night, you guys know what I'm thinking about this, right? We talked about, what's going on when these price action bars are taking place. Well, since then, the market's pushed down lower, and now we have a little hammer candle right off this previous swing point down here. Okay, if the S&P starts to come back into that gap, I suspect that the euro and the pound are also going to, trend down a little bit. Now, it doesn't mean that we're going to, fall off the cliff, because I think the pound does have a little bit of room to run to the upside, looking at the monthly charts and whatnot. But, one thing that we want to do is pull a fib from swing low to swing high, and look where we've come down to, guys, the 61.8 level. Now, it doesn't mean that we're going to stop right there, but the 61 and 78% retracement levels tend to be key levels in the forex market. So it's going to be interesting to see if the 61.8 holds, or if we actually indeed do come down to 78.6. Now, let's take a look at the chart for the euro US dollar real quick. And the euro US dollar, you can see we've basically had a consolidation pattern up here for a couple weeks, and we've shifted off of that level a little bit. Again, we also have a little hammer candle forming right down here. It was made on Friday. Now, what we need to do is pull fib from this swing all the way up to the high. Now look, we've come down to 61.8. We almost made it to 78.6. But what else we want to do differently in this one is pull swing point or fib from the lower swing all the way up to the upper swing. And we want to try to draw a little confluence channel. We have a 50% retracement and this 78.6 right up in here, which we've almost come down to. Okay, the next area that I'd be watching for is going to be right around the 128 to the 127.50s, we'll call it. Right up in this level, right over here. Now, MACD is looking a little bit weak. The bears are in control at this point in time. Now, that could change, right? We're in a news-driven market, and, they're definitely trying to push things around a little bit. So keep that in mind. But, with MACD looking the way it is, we could, possibly see a push down around here to the 128s to the 127.50s. Doesn't mean it's going to, because we still got to contend with this little confluence channel here, and then this swing point right here, which is the 61.8 and the prior swing. Okay, this is also a confluence channel, so we have a couple levels. One of them being roughly the 129.60s up to the 129.80s. If we break that, then the next level we're going to be looking at is the 129s to roughly the 128.75s. And then from there, that's when we'll be looking for the 128s to the 127.60s. Those will be the key levels that we'll be keying in on. Now, one thing to keep in mind, okay, I'm going to clear these Fibonacci levels off the chart at the current time. We still never did complete an A to B equals C to D pattern, okay? And you'll see that we came pretty close, but we did not quite get to it. Okay, it was roughly the 133, 30s, 40s, wherever you want to call it. I didn't draw my fibs exact, and those of you that have been with me for some time know that I don't believe in looking exactly to the tick. I look for areas on the chart. I'm not one of these guys that are specific down to the pip, okay? We're just looking for areas on the chart. Alright, now the next thing that I want to go ahead and take a look at, guys, and this has been amazing, okay, is the dollar yen. The dollar yen's rallied. I mean, this has been a heck of a move, running. It's still going higher at the current time. If we scroll this thing back, you can see we took out the swing point and we haven't looked back yet. Now, when this thing starts to pull back, you're going to want to key in on this prior swing point. Okay, and I've been talking about this pair for quite some time. I did some videos for the members and I got out of this a little bit early, right up in this area, thinking we might get a little bit of a pullback. And look what happened, right? I get out and the market really runs. But, you know, that's trading. You can't catch everything. I still think this has further move to go to the upside, but it's getting a little extended at this current time, and I'd like to see a little bit of a pullback. I'd like to see a little bit of a pullback so we can get back in on it. But what we want to do is key back in off this prior swing point, okay? So we want to drop a horizontal line across that swing point, and then we also want to go ahead and pull a fib from the swing low up to the swing high. Now you can see right around the 30% in that prior swing is acting as a confluence channel at this time. Now, if we rally up higher on Sunday night, Monday, then obviously we'll have to adjust this fib level up higher, okay? That's just the current high that we have at this time, and it doesn't mean that we will not be adjusting it, okay? Just keep that in mind. Now, another thing to look at how steep this angle is getting, guys. Now, the market cannot sustain this type of move. I mean, it doesn't mean it can't push higher another week or a couple days or whatever, but you know, this is getting pretty straight up, so you know, it's definitely susceptible to a pullback. Those of you that are aggressive traders, well, I mean, you might want to look at those to take a little scalp trade to the downside. But you know, not just the dollar yen. If we go look at this, and this is a broad-based rally, meaning that they're really weakening the yen. Look at the euro yen. Basically, from the swing point here, it went from 100 all the way up to almost 116, non-stop, 1,600 pips, boom, to the upside. Okay, go look at the Aussie dollar, Japanese yen. Same thing, from the swing point down here, rally out, roughly 1,200 pips. If we go look at New Zealand dollar, JPY, you're going to see too, roughly from 64, about 900 pips. Not as big of a move as some of the other pairs. If we go look at the pound, look at the pound yen. Pound yen, basically from the 125s all the way up to 141. So that's roughly 1,700 pips that the pound has moved. I mean, that's incredible moves that we've been seeing in these yen pairs. Now, keep in mind, some of that is news driven. They do have a new government in office, and you know, they vow to weaken the yen to help strengthen their economy. So, you know, a lot of this is government, but they also had some rhetoric coming out saying the yen continues to weaken at this fast of a pace, that they will intervene and start buying some yen. Now, I don't know if that's just all talk or whatnot, but you know, if they do, and that's what this little blip day down here was, and the market just, you know, continued rallying up. So, you know, you just want to keep these on your radars when they start coming back down. I believe that a lot of the yen pairs are in long-term bottoming patterns, and you know, it could prove for me to be wrong, but I think there'll be long-term bottoming patterns. So if we can catch some retracements, it might be worth looking into that in the future. But at this time, I'm not going to be a buyer up here at these current levels. Just a reminder, guys, we will be holding a free Forex webinar on January 19th. If you have not yet registered, you can click on the link below and register for that. There's only a limited number of seats, so you know, register while you can. Also, I'm going to try to leave the comment box open below this post. It's going to be something new that I'm going to try. If you'd like, leave a comment, any suggestions that you'd like me to, ways I can improve the videos, and whatnot. So any suggestions, guys, feel free to drop them in the comment box, or if you just like to comment on the charts in general. All right, guys. Like always, guys, I hope you guys enjoyed the videos, and let's make this a profitable year.